Meanwhile, the stock market has been struggling to stay in the positive every day. The U.S. economy is now officially in what's called a bear market, when stocks or an entire market drop 20% from a recent peak. These aren't that unusual. It is the 14th bear market going back 80 years, back to World War II, but every part of the U.S. is different, so I'm going in depth on this topic tonight, finding out what it means for us right here in Southwest Florida, where it's a balance over the past year of housing getting more expensive, but also the boost of millions of people coming here to spend their money.
And I believe this is the depression of our generation.
A strong statement on Tuesday from Florida Gulf Coast University economics and finance professor Dr. Thomas Smythe. But this is worth explaining deeper, given what we're seeing with inflation, last reported at 8.6% compared with a year ago. Housing costs are much higher, especially around this area. Interest rates are higher, retirement accounts, stock prices likely much lower for just about all of us. Smythe said the economy is likely headed for recession, and that the markets tend to be a precursor before it happens.
The hot job market is actually a symptom of inflation. So even though wages are rising and people are employed, the reality is their wages are not keeping pace.
Smythe said that after 2020 and into 2021, many Americans found themselves with plenty of money, but often nowhere to go with it. And this year, we're seeing plenty of people coming here.
We've been able to save money because there weren't places to spend it. Even though prices are higher, we want to get out of Iowa or Illinois or, wherever it is. And obviously, Florida and Southwest Florida in particular are good destinations.
He notes the unprecedented times of the last 3 years, a pandemic that slowed the economy with millions losing work and income for a time, and also what Smythe calls the choppiness in recovery. But the impact of high inflation and people not spending as much can lead to a domino effect that so many people will care about, keeping their job.
We withdraw from all areas of discretionary spending, whether it be travel, purchasing things for your home, whatever that is. We start to pull back, and that's where the recession part starts to come into play. And eventually, that will probably lead to layoffs of some magnitude, although it's far too early to tell.
Dr. Smythe also talked about so many of the elements that have popped up in just the past few months. The war in Ukraine, for example, raised the price of oil and also wheat, and mortgage rates are also up about 6%, nearly double from where they were last year for a 30-year. All plenty of variables to keep paying close attention to.